So for this year, every year is unique, and this year is no exception. Some of the things that we're looking at this year, when we come to the risk management table of options, is kind of taking a view of the table. What does today look like, and how might that guide us for our decision making um, with respect to risk management? So the weather. The weather outlook is dry in a lot of areas of the country, and we know that that can change very quickly. And sometimes it can change too quickly and go from one extreme to the next. But it's important to take a look at the weather, even though we can't predict it. The market prices, no doubt, have remained high for a lot of commodity crops. And there's a lot of crops out there that maybe margins might be feeling the pinch a little bit, or there's some definite risk there because of the input costs and what those have done this year. Certainly, input costs are something that probably we didn't have to feel we needed to manage as tightly from a timing and a cost standpoint as we do the last couple of years here. And then the expected margins on most commodity crops are pretty good right now, but it depends on your area, it depends on your situation, kind of the outlook. The other thing is political uncertainty out there. Certainly, the Russia-Ukraine conflict got our attention in the past, and it's still unresolved. There are many forms of political uncertainty that can happen from time to time, what we call black swan events. And then the potential guarantees in a lot of areas this year are still really good. We are into the discovery period for what we call the projected prices for a lot of crops for crop insurance. And that sets our benchmark price for our revenue guarantees. And also, a lot of areas, we're just starting the discovery period. And so there's still some risk there until we get those prices settled out.